Happy Friday, everyone. I'm a crazy person. I love Mondays. Monday, woohoo! It is a chop suey day for sure. It is probably, you could not even call it scalpalicious today, could you? Chop, 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 chop. Well, let's go take a look at the market here. Kind of flip on over to our charts. And I'll show you a little bit of what we got going on here to begin with. So I'm actually going to show you the Russell first. So here we've got our 1,000 tick on the Russell, and right around here is our open today. So basically we've been seeing a ton of overlap from one bar to the next in the market throughout this entire uptrend. Just a really steady grind. So the reason this is happening like this is because this picked up momentum to the downside as we went in towards the end of last month, and there wasn't a lot of shift in momentum at lows. So there's this steep 2B pattern. Let me show you without drawing all over it. So here's the first, the 2B. So with a typical 2B, what you have is it'll have more of a shift to it like this. So you get a low, slightly lower low. This one actually had a lower low and then an even lower low. And the thing that makes that A to B is that the difference between here to here was bigger than the distance between here to here when it broke down. So we do see that shift in momentum, but it's not a really big one. So overall, this extreme momentum on the downside makes it harder to sustain really rapid rallies. A lot of times you'll see things chop like this, and then they'll kind of gain momentum as it goes forward and gain some steam. Other times, we don't end up getting that gain. We just come into resistance and then it turns back around. So we actually saw that on oil, or not oil, gold rather. Let me see if I can grab a chart of that gold quick. Here's the oil. I'm going to pull up gold though for you. So gold on our 4-hour charts. You can see that chop on the way back up. So this had a really similar, pretty rapid drop on the 4-hour chart. And it shifted momentum to a little bit of a degree, and then did 2 main waves up. And so you'll notice overall, if we went up to a larger time frame, this is just basically all overlap on the next larger time frame. And then it gives us a little avalanche and crashes back down here. So that's something that can happen when we get this overall chop. But there's other times where it'll actually go a little bit flat and then pick up steam. And you don't always know which version it's going to do. So it's a trickier type of market to trade in. And right now, we are on a measured move here on the Russell, here to here, on the 2-wave continuation breakout this morning. So we got a little bit of resistance here. And what I'm looking at this point is with the shift in momentum right here, is it going to try to go and make it to that upper end where we have this as a 2-wave correction here in the middle? And then it keeps forging ahead to go to some slightly higher highs. Let me show you what this looks like on a daily time frame. I'm going to back this way out here. So here's what we're looking at on the daily time frame. So as you can see, not really clean, clear-cut pattern action here. The pullback is about the same amount of time as the left shoulder was, but the placement for a right shoulder is totally off, because usually we want this high to be lower than over here. So we would want to see something, a little bit more gradual or whatever right into here, and then go. So this is a little bit crazy in here going into this two-way pullback. Really sharp overall momentum, so it makes it harder for this to get going. A more ideal shoulder when you get a head and shoulders is when you get a nice two-wave correction where the second wave is more gradual, and then you get a much stronger, higher probability breakout, and it's a lot easier to time the low for the continuation, and you don't have as much chop as it gets started as we have here. So we have a little bit of the spirit of that head and shoulders in here. It's just not the prettiest pattern for it. So it can make things get a little bit trickier here as we deal with the intraday action. Let me go and flip on over to some of our other indices and show you what we've got going on there. So here we've got the Dow, and you'll notice I drew some channel levels up here on the Dow. So I'm looking at this as the next resistance level on the Dow on the daily time frame. And basically what I'm considering is how that would form into a parallelogram into the upper end and serve as resistance. So again, you've got that kind of messier two-wave correction going on here. So looking at resistance is also at previous highs. And another reason is that this move here is also pretty similar to a lot of the shorter impulse waves that we've had in the past. Not so much in here when things went crazier, but more when you have a little bit of that more consistent trend move. Can I even call it, your smaller two-wave moves in here. So that would be a typical impulse zone for exhaustion where we would start to see this have more of a struggle here. On the ES, you can see the mess throughout a good portion of the day. A lot of overlap from one bar to the next. We actually were hitting measured move levels here right at the end of the day yesterday with the two-wave move back up. That held, that had the potential to offer a breakdown at that point. What was a con against it is that it didn't have a slightly higher high yet at that point. So slightly higher high with this pattern, where we just kind of tilt this whole thing up a little bit, is a 2T. It creates a trap, which can then go and lead to a pretty strong reversal. So it didn't quite get there. Let me show you a little bit of a larger time frame here. So it would have looked more like that. And yesterday morning, that was one of the patterns that those of you that are in League of Traders recall I was drawing in the forum. So what we were looking for was if this was a little bit slower, it would go for a 2T. If it was a little bit faster on the correction, we would be looking for a two-wave correction down and then a reaction off of that. So we went with that version, but it still made that as a zone that we needed to watch as we were heading into the end of the day. If this had pulled back just a little bit less, it'd be easier to have that 2T to create a trap and pull back down a little bit more. So sometimes it's just a really subtle shift that can impact how the outcome performs. So for example, yesterday morning, we were looking at two possibilities. We were looking at, from right out the gate, it was right around here, we were looking at the possibility of it doing two-wave up, two-wave back down, and then a reaction to the support. That's the one that ended up playing out. But the other possibility we were considering was if it went sideways, that would do a 2T and pivot and turn around. And that actually is right about where this high here currently is right about where that would have played out as resistance. So if that pattern had formed like that, this is where we would also be looking for reaction levels. So you get your slightly lower high, your higher high, and then the pivot, and these would be measured moves. So you can see how those two play out with just a really subtle shift in how this momentum performs here. So right now we are at a decent level of resistance in the indices. Here's what we've got going on the 2-minute charts here intraday. This is fun, isn't it? Oh boy. Definitely a trickier market in here, you guys. I've been scalping today, just kind of a little bit out of boredom, actually, more than anything else. It's not a day that I recommend you guys do too much. We had jobs data this morning. We're going into the weekend here. Not really, I think, a lot going to go on. We might get a little bit of widening up this afternoon as people try to do some positioning ahead of the close. So we could get some better moves this afternoon. I'd give it till after lunch though. Ideally around like 1 o'clock is where we can start to see some of those kind of pick up speed, come out of this chop a little bit better. Did I make money getting chopped up this morning? Yeah, a little. Those of you that are in the forum saw my last little tiny one. I'll show it to you here just a second. It's the NQ. So what we're looking at here on the NQ is we're dealing with a triangle. And what did I tell you guys with the triangle? In the forum, what did I tell you? Yeah, break one way, then whiplash the other. And what happened? Exactly that, right? And I also said, use extreme caution. Yeah, so I scalped this just ahead of us here. Don't do that unless you have a lot of experience, you guys. I had to put orders on the books, really fast execution. But this is totally normal triangle behavior. So you get the breaks one way. So what I was looking at was the two-way move up here, shorted, covered, just looking at the measured move. And then actually, you know, if we didn't have forward focus, this would be the reverse because, as I said in the group, it usually goes and it can flip the other way again. And it's basically doing 2 and 2 moves. And yeah, so really nice, messy chop suey day here. So this afternoon, still looking at that potential for a 2T here on the NQ. But remember that on some of the other time frames, we still have potential that this can still try to keep going higher. There's still some added momentum in here. So I'm not fully invested on looking one way or the other at this point. I'm just looking more at what can I do on a scalp basis, or can I go do something else? So days like this, a lot of times I'm going and working on something else. It just happens that what I'm working on is market related, so I'm here anyway. But be careful when you're dealing with this type of market. Look for a momentum to shift to give you some more solid moves. Coming out of these type of moves, we do get pretty rapid impulse moves. So when you're in the right direction, you can get a really good gain. But this goes back to the class that I gave Mentor Monday this week on wipeout zones. And a wipeout zone is a zone where you can get a lot of false fake starts. You get shifted momentum, and it's shifted momentum where it's still trending. So you get slightly higher highs, and then you get these chops down and chop back and forth. And they can shift, and impulse can go one way. They can shift, and impulse can go take out the other way. But they can do a lot of fake moves each way before they go. So you want to go back, watch Monday's Mentor Monday class, because this is exactly what we talked about. We're going to go back this coming Monday, and we're going to look at the megaphones. So we've seen a ton of megaphones lately. And then the next week, we're going to look at when we get these wipeout zones, what are things we can look for that will increase the probability that we are actually picking the right direction? So that will be the tilted phoenixes and tilted avalanches. Those will be the week after Monday. So again, this is just the two-wave move. That would just be it for a scalp target. This would be it if you were looking at the scalp target on here. Just the two-wave move. Let me grab that so you guys can go back and look at it in the room. And then we're going to go take a look at some of these other markets here. Yeah, Forex pairs. So I had a play on the dollar yen last night. Forex, let me go actually. I still have that up here. So dollar yen has been one of my favorite ones lately because it does still have some of the smoother moves, even with what's going on in the overall market. But it is also dealing with chop suey type of action. So same type of messiness, and a lot of the pairs are doing the same thing. Here you can see the main turnaround is what we've got going on here on the 8,000 tick. So you've got your two waves down. You got kind of your shift at the bottom here. Phoenix right here. 1, 2, 3 move. And then this is kind of the shifting momentum type of zone here. And this is what the overall market is doing as well. So same deal of two-wave resistance here into the open. And it's going to be a little bit harder here. I'm looking to see if we can get some more reversal trades, kind of back and forth action here as we're coming into some previous highs. Let's see, here's the 90-minute chart so you can see that. So coming into some previous high zones, just looking for some more back and forth reversals. Here's the overall pattern. Those of you that are in League of Traders will know this well. Phoenix to 1, 2, 3 to widening up. So we're in the widening up zone here. So I'm looking for things that can start to give us some bigger moves again off of this zone. Let's see which one I had this marked on yesterday. Oh, it was right here. So here is the trade I did last night. And what you'll see is that this is something that's happening in the market over and over again. So I actually drew this template for you guys in League of Traders this week. Well, you're getting the two-wave move down, two-wave in that second move, and then you get the shift. So I bought this, and you can see it took a long time to get going. Went into the Phoenix, only did the two-wave up, shifted momentum, got me out of the trade. So this is a 100 tick chart. This is all that I got out of the move on 100 tick chart. It's just such a small setup on a small time frame. I saw it repeated again this morning. I didn't catch it this morning. But that pattern, you guys, that I just drew, take that as a template, especially those of you that are in League of Traders. I drew this out as a template for you. And this last move here, what you're looking for is the two-wave move like this. So you want your bigger two-wave move, kind of like a 1, 2, 3, and then the shift in momentum. And as this comes down to the lower ends of the channel, that's the buy trigger right there. And then it usually goes into a Phoenix. I was actually hoping it would go right here. Went into longer Phoenix. And then you're looking for just two waves coming out if the momentum has picked up compared to here. So if this momentum picks up, you're looking for two waves. Here's the correction, and here is wave 2, it shifted. If the momentum is the same as over here, you only get a measured move. So it'll only go to there, and that's all you'll get out of the trade. So let me show you the one this morning where it did it again. Right here. Here's the two wave. Here's your two wave shift. Here's your buy right here. And then the Phoenix in this was messy. It kind of pulled back a little bit more. And then here's the two waves up. That's all you get. That's your target. So this pattern repeats in the market over and over again. So right now with the way things are going on larger time frames, that's basically the type of thing that I'm focusing on right now, is just some of these smaller little setups. Got to take a decent sized position to make money on this on Forex here. But it's a really nice consistent pattern, and you'll see it over and over again in the market. You'll see it in, especially on gap plays in the individual stocks. So what will happen is that you will have, for example, gap up. This will be like a low. It'll gap up here. You get the two-wave correction. You'll get the shift, and then you'll get the buy, and then the buy will go into a Phoenix. You could get the same thing too on gaps down, where this is coming into a major support level. So it's just a really common pattern that plays out over and 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 over again. So larger time frames though in the market, there's not a lot that has me overly excited. I'm going to pull up some of the other Forex pairs here. I've just been doing mostly scalps lately here. We'll wait for that to load, and I'm going to look at it. I know Harvey has been big on palladium. It's been moving so well. That's a great one to study any of the patterns on, is palladium, the futures contract. PA. So here is what we're looking at on some of the other pairs. So let's start with PALL is the ETF for palladium. Low volume. So overall, just like that slow drift. I have like continental drift in my head here. It sure feels like it the way it's moving, right? Sleepy, slow move. Weekly charts are just kind of nondescript. We've got this rising wedge here. And so with the rising wedge, just like that wedge that we saw intraday, it can break one direction. So for example, can go and break to the downside, just do a small measured move, even do a measured move over there, could do that too, and just enough to break the channel and then go the other way. And sometimes it'll go do a little bit of longer break and then turn around and go again. So the first initial breakdown can be more of like a scalp type of move, just a shorter term type of move. This is a weekly chart, so could potentially be a swing, but then it can just whiplash right back. So you're always dealing with higher risk action when you're coming out of those wedges. Thank you guys. We got a wedge on the US Canadian dollar too. So this is a little bit of a flag type of wedge here. So what you're looking at is we had our inverse head and shoulders we followed a couple months ago, and then it's coming into a base. What you'll see on the weekly is that the weekly doesn't have much really going on for it either, but there is room for a second move up. The risk is that it could be slower. So since this spiked so fast, coming out of this, you could even get like two-wave moves that shift momentum like that. So that is a risk that we have here on our loonie. That's the core pattern. And again, the second wave down is faster than the first. Don't ideally like to see that. That's what we are seeing happening on the Dow on the daily time frame as well, because what it tends to mean is that even as it tries to break up, you get a lot more overlap. Now, yes, it can gain momentum, but all of that overlap and chart and choppiness to start with is not fun if you're trying to wait it out. Krone, Danish krone, we're at the upper end of the range. This is do or die zone on the weekly charts because it's trying to form a breakout. It's off to a little bit of a slow start, but overall, bias here is trying to get going with the upside. We need to see some sort of shift. You can see there's a two-wave move right back up into the resistance here. So we need to see some sort of shift that can really get that off the ground. These are always trickier to play because your ideal entries are usually at the lower end of the channel. And you're just kind of taking a stab at it. And so lower end of the channel, usually when I'm playing moves like this, I try to get in at the lower end of the channel, take off part of the position at the upper end of the channel, and then just hope that it really does go and gain the momentum. If you take a breakout at the upper end of the channel, though, much more likely that you could have a trap happen and have it pull back into the channel so that you're almost immediately in negative territory. And that is the main risk you run into when something is ranging like this. Euro dollar, same thing, but opposite. So these pairs trade opposite of each other here, but you're looking at the same thing. So here's the two waves down versus the two waves up. So my focus, as I mentioned last week, I'm leaning towards a breakdown on this. But again, it can give you the false starts and kind of pull back up in the channel. And you can see how it's already starting to slowly try to build. But it really needs to gain some steam on this on the breakdown. But my overall bias is for this to continue to try to gain strength on the downside. The euro pound is at support. You can see the two-wave move on the weekly here. Choppy action off of this low. So we have an inverse head and shoulders. Sometimes this holds, manages to spike. Other times it does one extra little flush. So this is a tricky zone in here too. Right at end of a two-wave move up on the intraday. I don't know if you guys can see that head and shoulders really clearly or not, but it's basically in here. So if it holds, this is basically where we need to see things kind of gain momentum here off this two-wave correction into lows. So weekly chart could do either or. Because if this just bases, it can go into a two-wave drop, which can actually gain steam and go even further like that. I'm going to pull up the monthly on this, see what we've got going on the monthly again. Yeah, so monthly has room to do that. If it holds, good, does not hold here. So this is a really, really key spot. So if it holds here, you've got your two-wave move right here. And it can go and try to do bigger inverse head and shoulders and pull up. I would expect that the pull up would be slower overall, but it has to hold right here. So we are right at a major do or die point here on the euro pound. So you want to watch the smaller time frames for momentum shifts here. And these are zones where basically I'm willing to try it either way and build into positions as it goes in the direction. And if momentum just shifts, I'm willing to flip on them. So what do you have for risks on a buy setup here? The main thing is that you've got some slower momentum here and faster momentum here. So that's one main risk. And that's probably really your biggest risk, because if this had been a little bit slower, a little bit more measured, it's easier to get a bounce so that even if things don't work out and it starts to slow down, you can still come out of it with a gain. Your cons on a buy are that you have two waves down already. Or sorry, your cons on a short rather, are that you have two waves down, so it can be a support zone from the previous low. So really it's dropping down to the momentum on the smaller time frame here. So I'm going to go back on the daily. And daily what we're looking at is it's trying to do this really messy inverse head and shoulders. So when you're applying things both ways, what you would do is you look for buys at the lower end. If momentum picks up compared to previous upside moves, then it's easier to say, okay, you know what? I need to hold this and I need to work on adding into the position so that I can get those bigger continuations. But you're watching the overall initial move. So first two initial moves, then you're watching the momentum on the correction. Not the momentum on each of the individual waves, but when you get two moves, how does that momentum shift? So you get two moves up, two moves down. If that overall momentum is giving you slower downside than upside, your chances of getting stronger upside are going to be greater. But within those moves, each of these could be pretty sharp on the downside. You could still have stronger than average momentum. But if the overall channel is slower, that can still allow for it to break higher and pick up momentum. So we're at a wiggly wobbly zone in here that's really going to come down to watching each of those smaller channels and how they continue to shift, and really looking at, when you're looking at trading two waves, not looking more for breakouts. So like if this is a two-wave move, you're looking for like a breakout like that. Not so much that, but looking for where you can short or buy at each end of the setup. And if it shifts here, then great, that can reverse your trade. But you want to look for zones where you're actually buying into the support levels and shorting into resistance levels instead of waiting for the bigger, larger trading range breakouts, because you don't have enough of a chance to keep a stop far enough away, or sorry, close enough, stop close enough that you don't risk it just triggering and then flushing. So like what we talked about with the triangles when we first got started here. This is kind of what I mean. So here, we're coming into this low, right? It's retest of the previous low. So you have your two-wave correction. So this is that first two-wave move that I was showing you guys earlier. And then what you can look for is the shift in momentum for a buy, but you're looking for the end of a lower two-wave move. So we don't see that in here to start with, but then in here, you get your two measured move, and it shifts that momentum here compared to here. So this actually triggers a buy right here. So that's what I did with the dollar yen last night. And when you're getting up here, if you're just taking the channel break, it can chop around on you. Whereas if you're buying it down here, you have an opportunity to protect part of your trade. So even if it doesn't go, you don't end up with a losing position. But if you wait for the pure channel break, you don't have that opportunity, and it can pull back in, it can chop around a lot more, and just kind of work on your nerves a lot longer. But if you look for those shifts, like that pattern, like that, buy it when it's coming down into the lower channel, you have really tight stops. So even if it only goes up to here, you've already, at least covered what you're risking and even possibly doubled it. So even if it chops around and eventually goes lower, treats this like a two-wave move, you don't end up with a losing position. Whereas if you bought the range breakout and that happened, you would have a stop. So that goes into advanced trade management on things like this. So you can look at that difference here. Here's that smaller channel versus if you took the channel break. But this is a good zone to get at least a bounce just based upon that bigger pattern that I showed you guys when we first started. It's just a variation of it. Look at J and UG. So we're doing the two-wave move here. This is like Roku. Because of the really sharp extreme move, it has a harder time fully developing into a stronger move. So what you usually would see here is something like this. So usually a little bit more upside here, and then another try lower. Roku. You've got that initial sharp drop again here. So two-wave move. You're at that level again. It can go and do shifts. So it can shift like this coming out of that channel at this point. Have a little bit harder time giving you a full scale, larger drop. if this was a little bit slower here into that, that could easily go into like a 1, 2, 3 continuation. You're at really good resistance. Larger time frames, the weekly I'll show you here, is a strong double top, but you can see how hard it hit it. So even though this is looking like it can go back down, you've got that risk that can come into a retest and then react again because of how sharp this initial move is and how fast it reacted off of it. So it can more easily do a two-wave pull back and then go back up and try to retest that zone too. So just to recap that Nasdaq, check it out, held exactly where we were looking. So it is continuing to be choppy. Scalpapalooza, really easy zone for traders to get whacked in. But that's what I like to see when I'm getting the triangles, because what that can do is a lot of times your triangles can then go and develop into more solid formations, because by giving these little kind of whack moves, they're just, little scalps. And if you know what you're doing, you can still make money on them like I showed you guys. But what it does is it creates more consistent channels. So you can take this channel, look at the time development on this channel, look at this impulse move in the past, go compare previous impulse moves, and then you get an idea of when this channel break should happen. So then you can start to look for changes in momentum again. That can give you a better breakout from the channel. So triangles early on, they're scary. They can mess around with things. They can break one way and then go back the other way. But it helps lead to some more consistent market action. So this afternoon, we could get things to widen up, like I said, probably after about 1 o'clock. Let's go up and see what we've got going on a little bit of a larger scale here. This is really one can go either way just because of where it's at on the larger time frame. So this can still do like a little bit of a trap, could do like a 1, 2, 3. If we look at the bigger scale, this is where we're at. And so if we look at bigger scale, some other moves, you can see they have potential to continue. But with that slower start and the larger time frame exhaustion, don't know how easily it's going to be able to sustain a move if it does. Your max level would be right here. So it is a possibility to get it to that level if it tries to go with the 1, 2, 3. It's kind of like repeating what you got going on over here. So I wouldn't rule it out. But if it goes, that's going to be the target zone. And of course, the other potential is that this goes out into a longer range. And we see that correction here. And that would bring in a little bit more consistent trading on some of the larger time frames here. So this is what we call a do or die point, because it gives you triggers one way or the other, and it comes down to the smaller time frames. So certain patterns will have really clear-cut, obvious directions that they're going to go at a do or die point, meaning it's very sure that you're going to get more of a breakout or a pivot one way or the other. In other cases, you might be at a placement in a larger trend development where it could go into a longer correction or it can continue. So your odds become a little bit more of a crap shot if you were just to like throw your money on the table at that level either way. But if you watch it on the smaller scale and use advanced trade management, even if you're wrong, you can more easily get out with a scratched trade and then have the potential to reverse it. So really pay attention to those advanced trade management skills that I teach you guys in League of Traders, because that is how you stay safe in zones like this where you have the V's and you're right at a major level of resistance. Let me snag this and put this in here so you guys can look at the other possibility. Just like what we looked at this morning in terms of how yesterday could have played out, or it could have gone into the 2T, depending upon how that momentum action was. Can I look at XLE? Oh, thank you so much. I'm so glad you guys are liking the Telegram. We need to get it even more active, so make sure you guys are posting your own stuff in there too. Get to know each other. Even if it's just things like, hey, such and such has news today, or XYZ is a gapper. Can bring attention to other folks might not have been looking at it already. So XLE is another one. It's a wipeout zone, you guys. So this is the entire class that we talked about on Monday, where you've only got one main move up, and now you've got this shifting choppy momentum. So the bias on this is actually in favor of another wave up, tilted Phoenix. You're looking at similar type of thing that happened over here, except it's at a lower zone. So right about here is your main resistance, and then this can widen up more at that point. This is the most likely level, but it is a wipeout zone, meaning we can get false starts that fail to confirm. But the way this momentum is shaping up on the smaller time frame, with the slower corrections overall, and then some stronger upside, that's what can help get this going. To increase your probability on things like this, when you're 50% back up, if you see a clear-cut two-wave move up, and then you get a nice inverse head and shoulders or two-wave correction into the 76.4% fan, that is your main highest probability setup. Let me draw that cleanly. So it would look like this. Actually, let me put the fan on there so you can see that. So if you want your nice, gorgeous, solid continuation moves, I'm going to put it like here because that's about where we would want like a nice consistent move to form. You would get a two-wave move up, kind of coming into the channel of the other congestion, pull back into the 61.8% zone, little bit of base along there, pull back into the 76.4% zone, and there's your buy. And then you'd be looking for two-wave up, main target, widening up at that zone. So that's what your highest probability setup looks like. So that gives you a place to compare. So it also gives you an idea of about, how long time development wise you'd be looking for by looking at, okay, if it did the most ideal format, where would that time development be to go? And so even when something's messy, it's still going to hold that same zone usually. It's just going to hold a really messy version of it. So it might not hit like the 76.4%, for example, if it hits like the 50, 61.8, but it's tilted. But if you look at where, if it had just held when it went into congestion or right at the end of here, if it just held there, straight out and chopped around, where would it most likely have touched the 76.4? And that gives you an idea. With experience, that becomes easier to judge, obviously, but that can help you out. It's just one thing to watch for to kind of help you out a little bit more. Euro Swiss, did we look at the Euro Swiss? I pulled it up, but we didn't do much with it. We're right at support, just it's a measured move. Support, you've got a little bit of a 2-year momentum shift intraday. On the weekly chart, what we have is a pretty strong trend to the downside. So these type of trend breaks, it can have the potential to go and keep going. It could also go into a longer base. So this on the short side is something you would want to see continued weakness right away without falling into a longer correction. If you start to see a longer correction form again, it could more easily pull back up. So if you're short, for example, on a breakdown at this zone, it's okay as long as it doesn't go and shift like that. Because if it shifts like that, that's most likely to break an upper side movement. I wouldn't do anything here as far as like a new setup goes. Intraday, what you'll see is that kind of shifting momentum like I showed you guys on the dollar yen earlier. That's the same type of pattern coming into these lows. So it gives you the first, two-wave movement. You're usually looking for a phoenix, and then you're usually looking for two waves. Obviously, this is really messy. So you can't even see that clearly in here at all. Spider. I mean, our spider outlook is basically the same thing we've got going on the ES. We're right into the upper channel. But the way it's teasing it, we're at a do or die point here. And the way it's teasing it, it could go and do a two-wave move up into here and then kind of widen out again and get messier again at that point. So we are at a do or die point again here, just with the measured move. But in other cases, this would usually be a nice strong short setup. The problem is that this correction is slower. Stronger upside moves, kind of already trying to break out of the channel, and this high over here serving as a magnet. So that increases that this could do more of a kneecap and go for a second wave. So it could be something that traps more people here. We even looked at this on a much bigger scale the other day on a weekly chart, where this holds. Because of where this is, we're not just looking at the retracement from this drop, we're also looking at where it is in this bigger channel. So because of that, there's even potential that this can go up to here and give us a bigger, wider wedge. Let me show you here with the IWM because you can see it a little bit cleaner. So in the IWM, that actually goes into the 50% here. So with IWM, when you get that widening, it has that room that it is quite conceivable that it could make it back up to this high this year. It just would go with more of a kneecap. So I'm kind of treating this like the same way I would a shifted momentum move in the like after one initial wave up, where it has that higher risk. Yes, we've got the measured move at the resistance on the daily time frame, but as far as shorts go, there's more risk to this here than there would be if it was happening after two main waves on the upside. We only have the one main wave coming off of the lows. So I'm still keeping this in the back of my head. Now, does it necessarily mean we're going to go get that? No, but the way the momentum has been forming, it leaves that as a greater risk than it would be if, for example, this had had like a more gradual move up into that midway zone. Then it would be more likely to hold that, give us that second wave down, come back into the low, even go and form an avalanche. But because this is so fast, that leaves that potential for that wedge to form. And a lot of traders will be focusing upon this previous high as a main resistance level. I'm looking at the largest resistance level on the larger time frames being what a measured wedge form would be. I'll show you this on the Nasdaq too. So here's the Dow. If it did try that, you're looking at that. Now this is still holding resistance on the weekly and yearly charts, even if it went all the way up to there. If it did somehow manage to do that, we are still at the same resistance that hit here on the larger scale timeframes that we looked at going into the start of the year. So it's just widening up on the monthly and yearly charts. So on the Nasdaq, you'd be looking at right back up there. And then what tends to happen when that happens is this can play out. It can go in here, be messy. It can even go up one more time and then turn around. So it can continue that extra chop for quite a while. Let me see if I can show you an example on a smaller scale. I know we've seen a few of them lately. Go back to our Russell 3 highs here, guys. That's a really strong resistance level. If I'd been not doing class, that would be a short for me right there. See the measured distance between the highs? Just missed it, but it's the move up here, right into that. That would be a scalp short. First support hit here. Let's see, where's an example of that? I mean, kind of like what you've got going on here. It's not, the perfect idea, but like if you consider that as like a widening range, see how it comes down and chops and then it comes back up, but it goes out really longer. That's the same type of thing, but we're like way back here when you're looking at the bigger scale. So like if you look at the monthly time frame here, then that bigger scale of where we could be right here is like way back here. So you can see exactly how much potential there would be for this to play out and just stay in a longer range without really, committing to doing too much for a while. Two wave major moves back and forth. Momentum, obviously, as that changes, that's going to change the odds of how these waves play out. But you just got to be aware that that is where we are at in the overall market with that potential to do that. All right, I'm going to do some really fast ones here and a couple questions, and then I'm out. So McDonald's, really strong resistance zone here on McDonald's. So this should widen up too. More of the choppy back and forth action. I'll put that on the daily. Daily, really good resistance here. So this is the triangle. So you got kind of your false first breakout here. This is the potential that that's all that might go. This could give you a short back into the range. It's a really good level of resistance though. So if you're long on the triangle, that's the zone you would want to get gains, just like on the Nasdaq that I showed you. Lulu is an earnings play here recently, but it's been kind of stuck since then. So on intraday charts, what I look for is that same two-wave move and the shift, and it's tricky in here. So the shift actually takes place in here. This is your Phoenix, and this is your 1, 2, 3, and then we're shifting momentum again. So this can break down. It can go and go into a longer range like that. I don't see anything I would do as far as trading it right here. Maybe a little tiny avalanche continuation as a scalp. Daily charts still have room to try to push but there's no new setup here. And BA, last one, Boeing. Boeing, of course, has been a news play here. So Boeing, same pattern I showed you guys. So you're at widening out zone here on Boeing. So in here, just kind of focusing on the channel, look for two-wave moves, but larger time frames, this is a trickier spot to trade. Look for things like 2Ts, momentum reversals. It can even do, because it's only one main swing up here, it could even do a tilted phoenix. So it's going to give you that wipeout type of zone. See if it goes tilted like this, the way it's starting out. If it shifts momentum like that towards the end of the tilt, then that can lead to the break higher. So you want to see like basing here. Oh, kind of hard to see where I'm drawing, but if it bases there, that can go and give you a second wave back up into here. That would be the main thing I would try to watch for here. So channel, base, look for buy, see if it can give us a second swing back up into the zone. I think a lot of the bad news, it's already getting factored in here. So it would take a heck of a lot at this point to really drive it down again, given the current news that's already been out. So I would be looking more for a tilted continuation. And UA. Intraday exhaustion. Daily wipeout zone. These are when you focus on just the two waves. So you're on wave 2 up, wouldn't do anything at this right here. You can go into a correction. Rounded, so it's not as easy to get that second wave up, but if you get that shift in momentum here, that can drive that. So that's what I would look for within a couple weeks here. Let's see what we've got on the weekly on this. Yeah, that can sustain that on the weekly. So just look for something that can help shift the momentum a little bit. Could even do a secondary move, pull back, and then still do it with like an inverse head and shoulders. But basically it looks like it's congesting to try to get ready to do another break to the upside. I'd like to see just one more little correction in here first. Oh, you guys are very welcome. All right, thank you all. I'm going to wrap on up here, and I'll see you over in the forum. So tonihansen.com/forum. You can join us live, and even if I am randomly in and out, you guys can share ideas with each other as well. I'm there at all hours, guys. I have like no schedule for when I'm in. This is why I trade for a living. So I don't have to always be there all day. As you guys know, as I pop in late at night. Mark, shoot me your question over in the forum or in Mentor Monday, and we'll look at that there. I'm going to take a little bit of a break here. And those of you in the forum, I'll see you guys in a little bit. All right, everyone, have a wonderful rest of your day and have a great weekend.